All right. We're just getting some people dropping in now. So I think what we're going to talk about today is some blended family, using eState Planner for blended families. And I'm going to just demonstrate a spousal trust and just other things, how to enter these family members in and things like that. So that's what we'll start, and we'll finish with whatever you guys have as far as questions go. So hope everybody's doing well. And I'm just going to share, you should be able to see my screen here. And this is just the after effect of a blended family tree. So we've got John Jones, who's our client. And you can see John has a blended family. So he and Phyllis have Nicole, and then he and Sarah have Timmy and Rebecca. And the other part of the blended family here is that he's got his parents have he and his brother, but his mother is remarried and he has a stepfather. And I'm going to demonstrate how to do all this, but basically, the one thing I would say is it's best if you find out that people have half siblings. So in other words, they have siblings from another set of parent, or one parent who's not the same, that you do that at the beginning. As of right now, if you add siblings and then you add a parent, it basically assumes that they are the children of the two parents. So if you do want to add, for example, a half sibling here, you could say that Mother Jones has a child, and deal with it that way. And you could add them as a child, and then they would be a child of the stepfather and the mother, and they would be a half sibling of John. So so that's sort of the after effect, but let me just go to sort of a newer one. So here we have John and Janice, and they have Jim. And we find out, oh yes, Janice has another set of family members. She has a child from another relationship. So we've added them in. And so now we'll click on Janice, because we're going to want to add a child to just Janice, not to John. So we go add child, and it's going to ask us, is John Doe the other parent? And the answer, of course, is no, it's another. So we can either put in the name of the first husband, the first spouse, or not. I'm going to do that. If we didn't want to even identify, we could just put none. But let's put new parent, and let's just say they're divorced. So we can set the relationship there. And now it'll ask us for two things. First, the new parent is the first question. So the new parent is Jordan. Let's just say me. And not to my knowledge, but anyway, there we go. And then it's going to ask us immediately about the new child. So this is our child, and the name is Thomas Peyton, male, June. So then the family tree will show this, right? This idea that there's and I'll just blow it up so you can see a little bit better. There's a dash line because they're separated or divorced or widowed or whatever. And then Thomas belongs to these two people and Jim belongs to these two people. So that's how you would deal with a blended family. And I think I've shown before that, if you want to add children in to someone, you don't have to put the spouse in. You can, but you don't have to. And you can put them in later. So if I add a child and then add somebody new as the parent, it'll just ask me to confirm, and I'll just show you how to do that. So Jim has a kid, and when I enter the kid, I don't put any parent. I just say none, and then I enter the kid, and the name is Holly Doe, female. Okay. So now I go back and I realize, oh, we need to add the name of the spouse in because we're leaving them a legacy or something like that. And so let's just do that. So we'd go Jim, and we'd go add the partner to Jim, and let's say they're common law spouse. It'll ask me, is that, do they share children with Jim? And I'd say yes. And now that person is going to show as now I can create them as the parent of Holly. And that's how you do it. And that's how you can add spouses in after the fact, etc. I think down the road, we're going to try to do some more work around siblings so that you can easily show that they don't belong. They're not full siblings, they're half siblings. But for now, that's sort of how you do the blended family kind of approach. So now we're sitting and we're acting for John, and we may want to do a spousal trust. So first of all, before I go there, let's just see if anybody has any questions about that, adding blended families to the family tree. I don't know if everyone's muted or not, but hopefully not. I'll unmute all just in case. Anybody have any questions?
No, it seems straightforward. Very good.
Good. Okay. So I'm just going to throw the mute back on for a second. So now let's just do, because in blended families, right, that's a situation where you might be considering a spousal trust more readily than if it was not a blended family. So let me just show you how we might do that. So we've got John, and we go to scenarios, and we're going to deal with what happens if the spouse is alive. So that's where you would see I'm just going to remove this, a spousal trust. So in this situation, let's just assume we're just dealing with the residue for our example. So there's two ways to do a qualifying spousal trust. And just to review everybody on qualifying spousal trust, if we want to avoid, there's income tax here. Let me just throw in a couple of things here. So the home is worth, let's just put in about $1 million. All right. And we've got an RSP, that's fine. That's worth 500,000, and the income tax, I always just put in 50% of that for a registered plan. But then we have something like an investment portfolio, let's say, okay? And that investment portfolio is worth $1 million, but there's a capital gain on it. And let's say the capital gain is $400,000. So whenever you're dealing with income tax, if you've got a gain of $400,000, you're going to base, at least the way I do it, is I just estimate it at a quarter of the gain as being income tax. That would be 50% of the gain, which is included as income, and then 50% of that is tax at the highest marginal rate. So I just wanted to demonstrate that, because depending on what you do here, right, we show that there's income tax of $350,000. Now, most of that is in the RSP, right? So let's say the planning we would do is appoint Janice as the beneficiary of the RSP. But we want to deal with the balance of the estate here. So let's just show how we would create a qualifying spousal trust. So the client says to us, okay, I want her to get the money during her lifetime, but when she dies, I want it to go back to my kids. So in this case, we have 100%, let's say we're giving the entire residue into a spousal trust. So we'd create a 100% segment, we'd add a gift. We're going to pick the trust kind of gift. Obviously, we're doing a spousal trust. The beneficiary is Janice. It's 100% of the residue of that segment. We'll leave the trustees the same for now. We know that for a qualifying spousal trust, we need it to last for the rest of the beneficiary's lifetime. Otherwise, it won't be a qualifying spousal trust. So if, for example, let me do a qualifying spousal trust, and then let me show you how I screw that up. So the other thing that we know is that in a qualifying spousal trust, the spouse has to get all of the income immediately, and it cannot terminate on any event. So we need to add a mandatory payment for the payment of income immediately. So we can't start it on something like 5 years after my death, she starts getting the income. It has to be immediate. And I can't put in a suspension event, such as if she's insolvent or cohabits or remarries. I can't do that. or else it won't be a qualifying spousal trust. So then I go done. And the gift over. So for a qualifying spousal trust, the gift over that you're going to pick is this one. And it's going to actually change the title, but it's going to be as other scenarios, per other scenarios. So you're just going to go like this, as per descendants only distribution. And what that means is it's going to say, okay, whatever I'm doing, if my spouse predeceased, I want to do when my spouse survives me, but then dies. And I'll show you how that generates. So that's how a spousal trust is created manually. And you can see the income tax is 0 now because this is a qualifying spousal trust. Now, let's say I screw up and I forget because I'm going through it manually, and I say, and the client says to me, no, if she dies or she remarries, then I want the spousal trust to end. Well, you can see the income tax just went up. Why? Because it's not a qualifying spousal trust. And I should get a warning. Let's see. Yes. So I click here and I say, hold on a second. Because the death of beneficiary is not set as the only duration condition. So just consider whether this should be a qualifying spousal trust or else get a non-qualifying spouse acknowledgement. So in other words, confirm that the client is okay with the fact that it's going to create this tax issue. Okay. So that's how eState can sort of double check if you do something, and it might be what the client instructs, great. But if a client instructs you to do a non-qualifying spousal trust, you'd want to get some confirmation of that from the client, because the assumption is going to be you screwed up by not doing a qualifying spousal trust if you don't have that documented. So that's how you do a qualifying spousal trust. I just want to move back for a second, just show you the easy way. And of course, there is an easier way to do that. The client says, I want a qualifying spousal trust. And of course, you have all those rules we could build in, but we could also just click the macro that says spouse trust entire residue. And all of a sudden, I've got a qualifying spousal trust. So there you go. While we're discussing that, I'm just going to run the template, and let me just create some sort of gifts. Okay, so we have that, and I'll run a couple of let's say it's all going to my siblings. Let's just do that. So instead of 50%, the macro is 50%. I'm just going to do 100%, and go like that. So if I want to show the plan to the client, of course, you can go to the summaries and say, here is what your plan is going to look like when we finish drafting it. And we've got the spousal trust there for the client. And then when she dies, it goes to the son. And then if he's not alive, it goes to the sibling. So that's the idea here. And let's just see how it generates, because I want to show you how eState generates the document. How are we doing for time? Not bad. Okay. So while I'm waiting the minute, and I'm going to open it up to questions. So anybody have any questions about that sort of the planning part of the spousal trust? All makes sense. That's certainly something that I would recommend to the client to consider. Not you should do it this way or you shouldn't do it this way, but this is one of those classic uses for a trust where you want to control what a beneficiary can do with the assets when they die, because what we didn't want is the spouse to give it all to their own kid when they died. We wanted it to go back to our client's kid.
Next saved message.
That's the idea.
Oh, hi, Eric. It's Bob. I'm calling because I've had your...
Just gonna mute that. Any questions, any comments on that while we wait? You won't have to wait much longer. We're just finishing the testing on this new version. It's going to be done in seconds. Okay. So here is, right, we enable editing. We say yes. And here is the will. And I'll show you I'm just going to go to the spousal trust. Now, I'm not sure we filled in any of the people, so that might cause a bit of a problem. But here is the spousal trust. So the idea is to set aside the residue, hold it and keep it invested until the third anniversary. So the way we deal with a spousal trust, because there is some tax planning that can be done between the date of the second spouse's death and the distribution to the ultimate beneficiaries. For example, there can be lost carrybacks from corporations and things like that. What we typically do is say you divide the spousal trust within 3 years after the death of the second spouse. So that's what we do here. So they're going to keep it until the third anniversary of the death of the spouse, or a date after the death of my spouse selected by my trustee. So it has to be the earlier of those two. So it can't be longer than 3 years, which is kind of the limit. And so that's why we do it this way. And that's the spouse gift over date. And in this case, we've got the payment of all of the income. We have income that could be generated post death of the second spouse, but within that 3-year period. And so we have to deal with that. And that's what this clause says. Just pay it to the people who are going to get the capital. And then we have unlimited discretion. In this case, that's what we chose for the qualifying spousal trust, to have unlimited discretion on capital. I just want to stop there for a second. There is no requirement that a surviving spouse get any capital. They only have to get all of the income. So you could limit it and say no capital at all. The one thing you can't do, though, is say, I'm going to give the capital to someone other than the spouse during the spouse's lifetime. That's the one thing you can't do. That would taint the spousal trust. But you don't have to pay it to the spouse. Okay. And then it says, okay, I want to divide it basically when the spouse dies or within that 3-year period after. Then I want to divide it among basically in the same way as I've dealt with as if she had predeceased me. So it refers to this paragraph, which says, and it just says, whenever you see the word survival date, read it as the spouse gift over date. And whenever you see the residue, read it as the Janus fund benefit balance. And so basically you would just read this to say that to divide the Janus fund balance among those of my son. Now this is a single beneficiary, so I didn't fill in any names. That's why it doesn't know what to do. And basically deals with the same way as if she had predeceased, which is what you typically want in a spousal trust. So that's how the spousal trust works. The new version is going to know, by the way, it'll evaluate the class, know if it's one person or more than one person, and deal with it that way. But and so we don't have any of those problems. But so that's how the software deals with a spousal trust and blended families. So, any questions?
Oh, that's great, Jordy. Thanks.
So, can I just take before people ask any questions, and I'm here to answer any. We're adding some more advisor alerts, and remember, those are the things that pop up to warn you about certain missing data or certain issues, like you saw when we didn't do a qualifying spouse, those kinds of things. Is there anybody have any ones that they want us to add? Things that you're either forgetting to enter and then realizing after you've generated the draft, oh, I forgot to give away the loyalty points, or the personal effects, or those kinds of things. Some of those we have in there already, but anybody have any comments on advisor alerts? And I'll unmute everything and see what people have to say. Yes, I've got the FLA election alert. We've got that. We're building that. Anybody? If you come across any, I'll keep the floor open, but if you do come across any that you forget, like especially if there's data that you're not doing, or something you're not doing and you're like, oh my God, I forgot to do that, and I've just generated the will, we'd like to put in just a warning for that. Just like I put in one because I kept forgetting to put the residence of the client in there. So we have that as already a warning. You can see that here. So because I was generating the will and it just said of Ontario instead of Toronto, Ontario, and I forgot, it was because I kept forgetting to go to the residence thing. So if you have any like that, that'd be great.
I've seen clients put in pets and there's no warning what to do with them or to consider any clauses.
Okay, so pets warning. Now we're building a clause for that and a dialogue box. But I'll definitely put that down as a warning that if they've got a pet and we should be discussing it. Yep, great. Those are easy. These advisor alerts are easy to do. So don't hesitate in sending me any suggestions because we can get those. It's not as difficult as the rest of it.
In terms of the interface, it would be useful if the advisor alert exclamation changed color if they're urgent ones.
Yeah, the thing is, it actually doesn't. Here's why we can't do that. And we thought about that, but it's because it actually updates when you hit it. That's when it actually updates it automatically based on the circumstance at that point. It's not running in the background because that was actually a difficult thing. But we'll see what we can do about warning if there's if advisor alert.
Hey, Jordy,
we might be able to do that under the new system.
If there's an alert for a dependent, for example, parent, I haven't come across one yet, but
yeah,
maybe that's something to
we have that. So the other thing it's going to warn you is if there's anyone with a special circumstance, it's going to pop up here and say, you know, Jordan is disabled or Jordan is estranged or Jordan, whatever it is. So, because I find like I'm always checking, like, how do I know if there's somebody here who's disabled? I can't tell. So now it's going to warn you.
Mm-hmm.
So great. So if anybody has any, please just flip me an email or type it into the chat on one of these. And now I'll open the floor to anybody who has got questions or
Hi, Jordan, it's Teresa. One thing I already told Michaela yesterday was being able to edit the notes. I'm finding that sometimes when I'm
Yes.
just putting a couple of notes in while the client's talking, and then you want to edit it because you either wrote it wrong or you need to add a little bit more, then I have to delete it and then.
Yeah, I agree with you. And so I find that a bit annoying as well. What I do is if I go like that and I add it, it's a huge pain because you can't edit it. All you can do is remove it. You can't even copy it, which is a bit of a problem.
Right, yeah.
So I've got that. Yeah.
Jordan, just the one thing I would just alert people to is sometimes I find that, you know, the last page, the signing page of the will, it says, you know, attest to this, you know, these 18 or 19 pages. And I have found sometimes that it doesn't populate the second digit. And if I populate it, sometimes it adds that back in. So just to keep, I'm not sure what I'm doing. Yeah.
Let me just find out about that. So you're saying here, where it talks about, you mean that these one page?
Yeah.
So the reason it's showing that is because you haven't updated the field code since you generated. So if you select all, right? Select all, then F9, it's not that it's missing a digit, it's that it doesn't calculate that, like unless you update the field codes.
Okay. Okay. Thank you.
And you can actually there's a function here in options. I don't know this too well, but if I go to, there's a thing that says, and I don't know where it is, but you can set it so that every time you generate the document, like you print it, it will automatically update all field codes. And that's a good way to make sure that you don't, and I think, let me just see if I've got it here. Something that says update field codes on printing. Yes. Where is it? Use print.
Oh, I can look for it later.
Yeah. Anyway, there is a function that allows it to do that, just so you, in case you ever forget, it will update the field codes. But that's what's happening there. It's because if I edit this, right? Let's say I edited the will and I took out this whole thing, you know, and now it's a different number of pages, right? So it's going to rejig that. So always remember to select all and update the field codes before you do anything.
Thank you.
Or when you finish, before you print, basically, or save or anything.
Jordy,
Yeah.
did you mention before that your new and improved software will take out the error codes at the end on the will
Yes,
guide?
it will.
Right?
It's going to, absolutely.
Good.
We're cleaning up a lot of that kind of thing, where it's not going to, it basically what we've done is we've created components for every sort of thing, and it's just going to mesh together much better. You're also going to have ability to change, like either each time or generally the font, the size, whether you want all caps, whether you want bold names, for like caps for names. Like I know some people like whenever there's a person's name that it's always bold, or
Yes.
it's always caps,
Yes.
or both. So you can do that.
Yeah.
It's just going to be a lot more powerful. Change the font, change the margins, that kind of thing, sizing. Yes, there is. A good question, a hodgepodge clause. So let me just demonstrate that. So here we are in the residue. And so what we could do here is in the children's, we have a children's gift, okay, pretty simple one, absolute, no strings. If we click here and say deduct prior advances, so this is, let me just show you where that is. It's under gift over, it's conditions. Usually it's none, it defaults to none, but let's say we want to, basically a hodgepodge is to deduct prior advances. So we say deduct prior advances, then it's going to give us a bunch of issues to fill in. So the first one is there a current amount that you want to take into account? So the way the new version will work is if you leave this blank, it's going to assume there's no current advances that you want to take into account. You're only going to include future advances. But let's say they owe already, you advanced them 100 grand, okay? And we want to include any future amounts, okay? And we want to include interest. So let me just show you this one. This would be, let's just say we're picking Thomas as the beneficiary. So we want to deduct prior advances from Thomas of 100 grand. We want to include interest. If Thomas dies and there's a gift over to his kids, we want that 100 grand coming off their share too. Okay. So that's how you would create a hodgepodge clause. It's condition, deduct prior advances. Let me just generate that document, and I should actually, I'm gonna show you something. So you're getting a glimpse, and it's a good thing Nick's not here, but I'm going to give you a glimpse of how the new one works. So this is John Doe. So don't worry about all this. This isn't going to be part of it, but I just want to demonstrate. So when you click single will, you're going to go like this. And there we go. It is 4.1 seconds. The document's generated, no longer waiting a minute. And here is the document, and I'll just show you the hodgepodge. So here we had the hodgepodge clause. Let's see. Yes. So this is the gift to Thomas, right? The residue is going to Thomas, but it says subject to the hodgepodge provision in this paragraph. And this paragraph says, at the date of the will, I have advanced the sum of $100,000 to Thomas. I may also make advances. It's not knowing if there's going to be who the other beneficiaries are. So it leaves some things for you to clean up. But here's the, and we call it the deductible advance. And then we say, okay, there's interest. And then you have options as to whether the interest should be charged from the date you lent it or advanced it, or from the date of death or whatever. And then we have it being deducted from the beneficiary's gift overshare. So there's that. We're going to be building in ways where you can make a class gift and then specify for each beneficiary what the advance might be. But right now it doesn't quite work like that. So you do have to adjust it depending on if you had made a class gift to all the children, but you wanted hodgepodge only against one, then you'd have to put that in. But you could use like this, you just have to add their name. So that's how that works. So let's just see, is blended families their ability to reference a separation agreement? So right now, there's going to be very shortly. If there isn't now, I know a marriage agreement gets referenced. There will be a ability to reference the separation agreement. I have that high up on our list. Any other questions? All right, it's 1 o'clock. What I'm hoping is, if not next week, by the first anniversary of eState Planner, we're going to have this new version out available for everyone, and you'll still be able to use the old version, but hopefully we'll have the new version out, and you'll be creating your wills in 3 or less seconds. So. Yes, the hodgepodge does forgive the loan. So as long as the hodgepodge wording would have that in there. I deleted it. Sorry. Maybe I can call it back up. Give me 1 second. So this. Yeah, so here's the forgiveness. Oops. Here's the forgiveness clause. So as long as they've accounted for it, you forgive the debt. So everybody, that's where we're at. Hope everybody has a good afternoon, and we'll see you again. Let us know. Yeah, you can create a home trust for anybody. Just so you know, just put the beneficiary in, the person that you want. That's all that you have to do. So I'll just show you that. I mean, so let's say there was a home, let's say this was the parents' home, you wanted them to live there. You'd go home, trust, and then pick the parent from the list and create a trust for them. You can create a trust for anybody. All right. Thanks, everybody. Have a good afternoon.